Fed Now with Ed Yardeni, president of Yardeni Research. And we've been talking about a Nick Timmerow's piece, Ed, about whether we do get cuts this year. You were on, I think, about 2 weeks ago. And I think at that point, you weren't completely sure either about how many or when they come. We've seen a couple of inflation data points since then. What's your latest on that? We see something in June or July, or June or July?
Yeah, Joe, I've been in the fewer and later camp on the federal funds rate cutting. I never really understood at the beginning of the year why the market seemed to be thinking 5, 6, 7 cuts. I was thinking that we should just stick with what Fed officials were talking about, which was 2 to 3. But over the past few weeks, I've had my doubts about 2 to 3, not just this past week when we saw hotter than expected inflation. It's just the economy is doing quite well, and inflation, I think, is still moderating. So my mantra is, why mess with success? There's really no need for the Fed to lower interest rates. So I think Fed Chair Powell and his Wednesday presser is going to be a touch more hawkish than he had been recently, for example, at congressional testimony.
Where's the strength in the economy coming from, Ed? It was somewhat unexpected. And where are there beginning to see some signs of some weakness?
Well, I think the main focus always has to be on the consumer. Consumers account for 70–75% of the economy's activities. And I think that's where we've seen the strength. And clearly, a lot of that has to do with the labor markets. You don't get a recession when employment's at an all-time record high. You don't get a recession when within that you've got construction employment at an all-time record high, healthcare employment at all-time record high, and so on and so forth. There's a lot of strength in the labor market, and we keep watching those initial unemployment claims every Thursday, and they just continue to hover just north of 200,000, which is consistent with an unemployment rate below 4%. So I think that's where it is first and foremost. Weakness, there's been a lot of talk, obviously, about commercial real estate, and that could present itself over the next couple of years because as things get refinanced. But even there's some signs that it's just not just across the board weakness. There are some areas of strength within that. So, and even commercial real estate prices may be starting to bottom. So it doesn't look all that bad.
Is any of this residual stimulus or fiscal spending or the Fed's balance sheet, any of the things that we've talked about in the past? Ever since Congress flipped, there hasn't been any new legislation. Has there been anything? We barely can keep the government open. But is this CHIPS Act, Inflation Reduction Act, infrastructure, is any of that playing into this?
Absolutely, because that's another area of strength is capital spending and public spending. We have seen a tremendous amount of onshoring activity, which we've seen in manufacturing facilities production. So that's been strong. I think it remains strong. And then once they finish building the facilities, they're going to have to put in a lot of equipment, robotics, automation, and even labor. So I think that's an area of strength. And then public infrastructure, there's still a lot of money being committed to roads and bridges and so on. And that is likely to continue. So, yeah, that stimulus is still there. And by the way, while we're all looking at the government's outlays on interest income going up and worrying about it, in the short term, it is an outlay and it is stimulative. There's a lot of people who live on fixed income assets, and they are actually doing extremely well without taking a lot of risk by keeping their money in money market funds or even some deposits that are paying more.
I guess the infrastructure bill was bipartisan and the CHIPS Act was bipartisan. The IRA was not, but it just present a problem for Republicans who have criticized all that spending. So in your view, it's working at this point? And I mean, we do have a big, we have $34 trillion to worry about in terms of, all the debt we've built up. But is it working near term? Why don't we do more of it then? And that seems like a terrible lesson that we're learning.
Yeah, I mean, that's so-called modern monetary theory idea that the government can spend without limit because it prints its own money, and lots of people overseas in the United States are willing to finance the deficit. No, I think it's a dangerous road to go down. I think we've gone down quite a bit in that regard. The main problem clearly is at some point the bond market might very well care about all this supply of securities. It gave us a hint of that. Remember, Joe, last summer, August, September, October, we saw the bond yields soar from 4.25% to 5%. So, you know, my friends, the bond vigilantes seem to have gone into a little siesta mode here, but they're starting to wake up a little bit. I mean, 4.3% on the 10-year, you know, that's the risk. If we get a situation where people worry about inflation again in the bond, if they worry about it in the bond market again, and they decide that the auctions are too large, then we'll have a problem again.
All with possible rate cuts coming, which doesn't make any sense.
Doesn't make any sense. I mean, you know, you can't have a situation where the Fed goes from, you know, stepping on the brakes, not tapping on the brakes, but slamming on the brakes, to suddenly stepping on the accelerator, and then combine that with ongoing fiscal stimulus so that the fiscal authorities are stepping on the accelerator. That's not a healthy thing. That's why I'm not rooting for rate cuts. I think the economy is doing just fine with this level of interest rates. Leave it alone.
The other big story we're watching is Nvidia, the company about to kick off its developers conference. Christina Partsinevelos is there live in San Jose with what we can expect from CEO Jensen Huang in just a matter of hours. Christina, the bar is high here.
Oh, it's incredibly high, and we saw that with the stock rise in Nvidia shares. But this is a developers conference, and they are going to want to hear first and foremost about the latest product, specifically specs of its latest AI GPU. How much memory will it have? How does it compare with AMD's latest chip? And its price point. We're expecting maybe about 30% higher than the H100, and this I'm talking about the new Blackwell chip. So we'll want to know a little bit also as well details about going beyond GPUs to include Ethernet cables, storage, and just that entire ecosystem, software as well. Jensen Huang is giving a 2-hour keynote, something we haven't really seen. You know, he's done this in the past, but the fact that 11,000 people are going to be coming to this big arena behind me is something new that we haven't seen in the last 5 years. And we should hear more details about partnerships, maybe some celeb CEO appearances, and examples. Micron's earnings are out on Wednesday. They've alluded to a collaboration with Nvidia, the same for Oracle, the same for Broadcom. TSMC makes Nvidia's chips, so we could hear more about that relationship and see the impact on some of these shares like Supermicro, ARM. You can see up 2% just today. Lastly, the theme, demand sustainability and visibility into 2025 and beyond. Will inferencing be the next major driver for growth now that many large language models are trained? And how will that expansion into other sectors continue to grow, like finance, healthcare, government, sovereign wealth? And if Jensen Huang continues to speak about that, that could help show that the pace of growth is going to continue. And much of these points, to come full circle, Melissa, are priced into this stock. You know, the share price has gone 82% higher in the last 3 months. There's been a lot of volatility just within the last week and a half or so. You know, it was down 4 out of the 5 sessions just last week. But it's the total addressable market, the TAM, which Jensen said would grow from $1 to $2 trillion in the next 5 years. So any type of details on what that means per year for them could reinforce this AI trade and provide confidence in demand sustainability beyond 2025, which is going to be a key theme here. In other words, the best of the AI golden age has yet to come. Or as Jensen Huang has said, we're still in the early innings.
Right. Same thing, right? Christina, though, when you talk about the total addressable market number, it's staggering. But does that also include software? Because this is a developers conference. Yeah, so Nvidia has to convince people, right, that if they're not just going to be slinging GPUs, it's a whole software ecosystem that they also offer that will be a barrier to entry for others like an AMD. I mean, AMD has made some progress with their own software, but not as far along nearly as Nvidia.
Precisely. So Nvidia offers CUDA, so that's their big selling point. The developers are already using this type of software. The switching costs and learning would be very difficult to go on to any other type of software ecosystem. But for that total addressable market, that $2 trillion, it encompasses not just software and not just GPUs, but you also have the CPUs, the Ethernets, you know, the entire data center infrastructure. They believe that every infrastructure out there, the data centers, are going to need to be revamped to be able to accommodate the processing for AI. And so that's why that number is so high and can go from $1 to $2 trillion. For here today, I think what would swing the stock is if we start to hear a number per year. So if it's, $500 billion per year for them, then that's going to be a big mover and also reinforce that trade that, hey, okay, AI is sustainable. It's not going to be just a blip in the, a short-term thing. Fixed costs are going to be high right now, and then it's going to diminish in the next 2 years. So that's something we need to hear from him today.
All right, Christina, thanks. Christina Partsinevelos. And do not miss NVIDIA CEO Jensen Huang in a CNBC exclusive interview with Jim Cramer. That's tomorrow, 10:15 a.m. Eastern Time. Joe, you're noting that, we should watch the stock very closely considering the key reversal that it showed last week.
So on Friday, March 8th, you had that significant reversal from 974. The stock tumbled down to 874. Something somewhat similar this morning, 946, the stock was up at 924. It's now fallen back below 900, got down to a low of 878.37. The point is the importance of Nvidia on the market. So as Nvidia had that little bit of a rollover this morning, you saw the market pull back with it. Nvidia still is the center of the universe. As goes Nvidia, will go the market. And it's interesting because Jensen Huang probably has more impact on the market than Jay Powell does this week, if you think about it.
Oh.
Which is really a remarkable condition, but it also speaks towards that the market is able to overcome some of the friction and inflation and the treasury market because it sees the opportunity and the revenue growth in the AI story.
And the impact on tech, but semiconductors.
Yep.
I mean, since the launch of ChatGPT last year in early part of 2023, semiconductors have outperformed the S&P 500. I mean, it has ignited this trade here that the market has been so dependent on.
100%, and I think we've run out of adjectives or superlatives for Nvidia. When I think about data center growth, it's quadrupled year over year. And I'm interested to see what this comment. I mean, Christina went over a lot of potential discussion points for today, and I think, for me, it's continued partnerships, but the big question for me is what is the pull forward? How much have we pulled forward already in terms of growth? Are we going into 2026, right? Because we know what the price action has been over the last year and a half. But that'll be a question because we have seen boom bust cycles in the semiconductor space before. I don't think anyone would debate what's going on in the short term, but how much have we priced in? How much have we pulled forward?
Steve, you have a small position in Nvidia. What concerns you about the stock, if anything?
Well, the valuation, but I think they'll grow into it in terms of what we saw today. The stock was up 35 points at one point, which is not tremendous when you consider what base it's operating off of. But there's a lot of expectation in this speech. To me, it's going to be more of the same. I'm not saying that in a bad way. It's going to be that NVIDIA is the leader, that NVIDIA has new products coming out, and that NVIDIA is going to raise prices. So I think everything's fine for now. I just wouldn't get excited about a 2-hour speech. Probably, if I were there, I'd probably fall asleep during it because I fall asleep during 2-hour movies. But here's what I'd say, that every large tech company, Microsoft, Apple, Meta, are very incentivized to build their own chips, and they will. And they'll do it through ASML, using their tools, and Taiwan Semi. So competition is coming. However, offsetting that is that you've got such exponential growth in AI. This is truly industrial revolution. So I think there'll be multiple winners, but I would not dip down away from the large cap companies because they've got the balance sheets to drive that growth.
Yeah, I mean, the ripple effects, Shannon, are immense. Wedbush had an interesting note out, I think it was today or Friday, saying that for every dollar spent on the H100 chip, there's $10 to $12 in enterprise spending on the back of that to support that chip. So it's not just the chips, it's the whole array of goods that Christina had sort of gone through, the Ethernet, the software, et cetera.
Well, I think the concern is, too, Melissa, if you think about when people are talking about valuation, what they're concerned about is this shorter-term overestimation of the impact and monetization of AI. But longer term, there's likely an underestimation in terms of not only revenue growth that can be derived directly from AI, but productivity enhancement and improvement. And so if you think about it from a longer-term perspective, what you're really hoping for from a market is that we are still cresting that first wave, and we don't hit that inflection point where there starts to be perhaps disappointment in what's happening on the enablers from an AI perspective, and we start to see that monetization come through on those ripple effects. So that's really what the concern is, this shorter term concern that we don't see the pickup on the second wave. But longer term, there's a lot of analysts who are likely underestimating the longer term impacts and the fact that they might be able to actually offset some of these higher structural costs that we're likely to see over the next few years.
Nvidia kicking off its AI Developers Conference today. Let's find out what investors can expect from the 4-day event. Joining us now is Doug Clinton, Deepwater Asset Management, founder and managing partner. 4 days is there should be a lot of info coming out of it, Doug. What are the highlights going to be? No one knows, obviously, but what do you expect?
I think the big thing that everyone is looking for, Joe, is the announcement of the B100, which is NVIDIA's newest high-end AI accelerator chip. It's said to be about 2x faster than their current high-end chip, the H200, and it'll cost probably 20 to 30% more than the H200 as well. So you're getting 2x performance, which is what the specs show right now for the B100 versus the H200. You're only paying 20 to 30% more. I think NVIDIA is going to try to make this a pitch to all of the hyperscalers and other big entities that are building AI infrastructure, that they can get even better chips from NVIDIA at a better price. Even though it's a higher price, the performance is better.
So does this help with NVIDIA kind of has a moat in certain parts of AI in terms of designing a system, maybe not as much in the deployment of it, but does this help in terms of beating back the competition, which is you got to think that it's coming and on the horizon. It's such a lucrative place to be.
I mean, AMD has been a ferocious competitor. They put out their high-end chip late last year, the MI300. With the new B100, we'll start to see on the memory side, that's one important difference between what AMD did with their last chip and what NVIDIA currently has in the market. We'll see them take a step up in terms of how much memory they have on board this chip. So to your point, Joe, I think it does put them back in the clear pole position when we get this B100 announcement, and the ecosystem as well. I mean, that's the other big thing that has always been an advantage for NVIDIA, the CUDA software system. Obviously, everyone is used to using NVIDIA hardware, and so that's a really powerful advantage. They do still need to stay in the lead on the technology front. I think today's conference will show that they are still there.
There are certain components where you don't need to pay up for NVIDIA's chips, right? How much of the deployment or build out of AI can you use commodity type chips to help, and who plays there?
When you think about training versus inference, those are really the two types of workloads for AI compute. Training is when you take a large model like a GPT-4 and you actually build intelligence with it. So you run a training cycle. It might cost hundreds of millions of dollars to actually train a model. And for that kind of workload training, you really do need, I think, the high-end chips to get that type of work done. Inference is when you have a trained model and then someone asks a model a question, for example. The inference is running that question through the model and getting an answer to customers. In some cases, you can run those inference workloads on different chips. And I'd say that's where we're seeing probably the most competition right now directly to NVIDIA. NVIDIA, you can use some of their lower end chips for lower end AI workloads. They have chips like the A40, the A100. They're much cheaper than the top of the line H200 right now. But really, I think they still, even if you're not buying the high end chips to do that training work, they still are the leaders in inference too, with some of their older edge chips that are still in the market.
Hey, Doug, can you talk a little bit about Supermicro? It's going into the S&P 500. Its growth has been phenomenal. The stock has risen 12-fold over the last 12 months. What kind of moat does that company have?
That one's a little tougher for me. We don't own Supermicro, and I think you've seen too from Dell this year, another stock that's performed really well in that server space. The issue in our view, when you think about the server space, is that that business does feel more commoditized. It's hard to really build a tremendous moat around putting together, third-party hardware, which is what Supermicro does with Nvidia's chips. And then really have something that you bring to your customers and say, look, you can't get this anywhere else. I think they can get that in other places. I think we've seen it with Dell's strong numbers so far this year. So Supermicro has been an incredible story, and I think that they are playing in a really great place, and they are an important player. But I would be a little bit more cautious on that one because the moat is just really hard to justify.
You had a lot of product knowledge about all these things. If I ask OpenAI to help me understand all the things you just talked about, can it look at itself and tell me all the products like you just said? Could it do that? Could it help with my intelligence on this, Doug? Would you think that
Absolutely.
would work? Really? So I could try that.
It's augmentative to humans. I think that's the beauty of AI. It's not about replacing humans. I think sometimes we get that narrative.
Especially humans who don't understand.
Yeah, I need more than just augmentative, I think.
Market-moving report today that Apple's in talks with Google to put Google's generative AI Gemini system into its iPhones. That is sending shares of both stocks higher today. Deirdre Bosa has some details for us, and certainly, I'm sure, some context, as she always does in her tech check.
Good morning, David. So this is really an AI plot twist, validation for Google, and more doubts around Apple's strategy. Their stock movements over the last month, they really do tell this story. Alphabet shares, they fell on that botched rollout of Gemini in late Feb. They've continued to lag broader markets. Microsoft, despite some concerns around Copilot, it's continued to be seen as the lead. But look at that tick up on that blue line, which is Google today. That's today's report, a shakeup. Google leapfrogs Microsoft with that. At one point, it was up 7%. A deal to license AI features on the iPhone. It would be a strong rebuke to the bears who worried that Google's Gemini was falling short of competition and that it would have trouble monetizing its AI. That current distribution deal with Apple that we talk about often, that has helped cement Google's dominance in search. Another AI deal that could give Google a boost in the early innings here. Now, going back to that chart, Apple, you'll see, is the yellow line, remains at the bottom because it's still seen as last among mega caps in this AI race. And this report doesn't help that perception. Apple, of course, it's rarely the first mover, preferring to perfect a product before releasing it. But anticipation has also been building that Tim Cook & Co. would announce something big on the AI front at WWDC in June. That's its big developer conference. Of course, guys, only a report for now. Apple could still quietly be building up that AI strategy behind the scenes. We don't have other details like how it would be branded and even who would be paying who. Does Apple need Google more, or is it the other way around? But all of this reshuffling over just 1 month, that chart I showed you, it tells us how volatile this race is and how quickly winners and losers are perceived. The next few months will provide plenty more catalysts. We've got Google I/O May 14th, Microsoft Build, that's only a week later, and then, of course, Apple's WWDC in June, when many are expecting that big announcement, which could still happen. So we'll see, but this is how it's looking today.
AI leader Nvidia is kicking off its highly anticipated GPU technology conference today. Joining us right now on what to expect is Ray Wang, founder and principal analyst at Silicon Valley-based Constellation Research. He is attending today's event. And Ray, this is a big deal. I think the futures this morning are up in large part because of things that the market is anticipating we might be hearing. What are you thinking?
Becky, definitely so. This is the Davos of AI. This is where the developers, up to 10,000 or 10,000 more folks, will be here converging. And I think the highlights are really trying to understand where is Jensen's vision in the future and what new chips are out the door. And I think codenamed Blackwell, the B100 chip, is the one where all eyes are on at the moment. This is expected to replace the H100, and it's going to be a 3-nanometer class chip built by TSMC, which is going to be a lot faster than the H100, which is the current leader.
You know, I've been trying to figure this out. Nvidia has not really been very secretive about this. We know about the B100. So what could they say that would surprise you or make you think, wow, there's more room to run than I even anticipated?
There are a couple things that are important, and it's not just the chip. Kind of like when the internet was being built, everybody was wondering who's going to win. Is it going to be the people that provided the pipes? Is the people who provided the picks and axes? But it turned out it was the companies that built their business models on the internet as a distribution channel. Those were the ones that won. And so the question is really not just the new chip that's coming out and how they're building it. It's going to be the software ecosystem, the partners that are on the next inning, and those second order, third order effects are going to be the companies that are going to be building the next stages of AI. And Jensen and Co at Nvidia have been investing in those companies, and you're going to see a lot of those partnerships on stage.
Okay, so that's what you want to know even more than the Nvidia news on this. I mean, Nvidia is up 2.7% this morning ahead of this, but you think there are some potential partnerships that will be revealed, or maybe the depths of those partnerships will be revealed, and that could be even more lucrative?
Those are going to be the ones where you're going to wonder who's going to build that next business model. It's kind of that refrigeration example here. Like when refrigerators were being built, right? The winners weren't refrigeration companies. It was Coca-Cola that actually outperformed everyone else. So who's going to be that next Coca-Cola in the age of AI? It's also, where are they going to grow next, right? Data centers are pretty much capped. And so the question is, how's that sovereign AI strategy going to work out? How well are they going to do there? And then, of course, just trying to understand that next order of, the chips that they're building are so complicated. There's a 2-die configuration that's potentially being used here that no other company is going to be able to get to. And that's really going to be what are the other order effects, TSMC, Supermicro, and other chip manufacturers, if they can even catch up.
Not to mention what they're going to be doing for China. There is the possibility that they'll announce a new chip for China as well.
Of course, and they're going to produce another chip that's going to be less power, more constrained, but it'll be interesting to see if China's interested in those chips at all.